Survivor Benefit Plan, SBP. The purpose of this briefing is to give you a generalized overview of the Survivor Benefit Plan. Later, a personal briefing will be scheduled with each retiring member. Spouses should also attend that briefing. At that time, you will be provided with more specific information tailored to your own family situation. Each member will be required to make an SBP election prior to retiring. So what is the Survivor Benefit Plan? Your military retired pay will stop when you die. Many spouses of retired military personnel were being left destitute when the member died. On 21 September 1972, Congress implemented the SBP, Survivor Benefit Plan. It is a government-subsidized annuity program which was patterned after the Civil Service Annuity Plan. SBP is the only way to continue a portion of your retired pay to a beneficiary after your death. So who can you name as a beneficiary? In the SBP, you elect coverage for a category of beneficiary. The different categories are spouse only, child only, spouse and child. Spouse only. If you elect spouse coverage, the person married to you when you die will be your covered beneficiary. A spouse's annuity is suspended for remarriage prior to age 55, but can be reinstated if the remarriage later terminates. Child only. If you elect child only coverage, all your dependent children will share the annuity while they are eligible. Children remain eligible until age 18 or until age 22 if they remain unmarried and full-time students. Permanently disabled children remain eligible for life. Spouse and child. If you elect spouse and child coverage, your spouse upon death will be the primary SBP beneficiary. Children are contingent beneficiaries and receive the annuity in equal shares only if the spouse becomes ineligible due to death or remarriage prior to age 55. If a member has a former spouse, you may elect former spouse or former spouse and child. If you elect former spouse coverage, the former spouse will be covered and be your covered beneficiary. Former spouse and child. Under this option, only children which resulted from the marriage of the member and the covered former spouse are eligible to be covered. Insurable interest. Insurable interest coverage can be elected only if the retiring member does not have a spouse nor dependent children at retirement, and can be a relative or a non-related person with a financial interest in the retiring member. So, what is a base amount? The base amount is not the amount the beneficiary will receive. It's the amount that determines the cost and the amount the beneficiary will receive. The base amount can be as high as your full gross retired pay, or it can be as little as $300. The smaller the base amount, the lower the cost, but the smaller the annuity payable upon your death. As an example, a base amount of $300 would provide a monthly benefit of only $165. How much does SBP cost? Spouse-only cost is generally 6.5% of whatever base amount you elect. Costs for child-only coverage are based on the age of the member and the age of the youngest child. Child-only premiums are generally much cheaper than spouse coverage because children are beneficiaries only while eligible. Costs for children coverage added to spouse coverage, spouse and child coverage, are based on the age of the member, the age of the spouse, and the age of the youngest child. The cost to cover children under this option are generally even less expensive than child-only costs because children are contingent beneficiaries in a spouse and child election. They only receive the annuity while eligible and only if the spouse becomes ineligible for the annuity due to death or remarriage prior to age 55. Here are some examples of SBP costs. So assume the base amount is $1,700 and ages are retiring member 43, spouse 41, and the youngest child is 7. Assume full coverage is elected. Spouse-only coverage costs $110.50 per month. Child-only coverage costs $5.78 per month. Spouse and child coverage costs $110.99. Additional cost for child's portion is only 49 cents. So how much would a spouse receive if a base amount of $1,700 was elected? The example of annuity payable upon member's death, if base amount selected is $1,700, 55% of the base amount is $935 as monthly annuity. How much would a child receive if a base amount of $1,700 was elected? With $1,700 as the base amount selected, 55%, that would give a monthly annuity of $935. Benefits split equally among all eligible children. An example of 2, the children would receive $467.50 each. Caution: child coverage is less expensive, but it can't replace spouse coverage. When comparing SBP with commercial life insurance, remember that your SBP premiums are not taxed. If SBP premiums were included in your retired pay, you'd pay more in taxes. SBP coverage can't be canceled due to health problems. Premiums are not based on your age or your spouse's age. The SBP is subsidized by the government. Generally, your spouse will recoup all your SBP premiums within 2 to 4 years following your death. Payments after that are all paid by the government. Insurance provides a lump sum payout, but there is no SBP lump sum. However, when the insurance lump sum is gone, that's it. Your spouse, however, can never outlive the monthly SBP annuity. Additionally, the SBP annuity paid to the beneficiary increases with cost of living allowances, which provides inflation protection for the future. Your spouse is automatically covered by SBP at no cost to you while you are on active duty. Prior to your retirement date, you must decide whether or not to continue that coverage into retirement. Your spouse must concur in your election should you decide to terminate or decrease that active duty coverage upon retiring. A concurrent signature is a statutory requirement because reducing or declining spouse coverage will have a direct impact on your spouse's financial future. The concurrence requirement is not only a military requirement. Civilian survivor annuity programs require the same concurrence if a survivor annuity is not provided, based on the legal theory, the right of expectation. You are required to attend a personalized one-on-one briefing. Your spouse should also attend. The law requires both you and your spouse to be fully informed of the options and effects of the SBP so that you can make an informed SBP decision and so that your spouse will understand the implications of your decision. Please have birth dates, marriage date, and social security numbers for all family members with you for your personal briefing. You can make your SBP election at that time. The election, however, can be changed up to your last active duty date. Very important. Every retiring member must complete a DD Form 2656, which DFAS uses to properly establish your retired pay. So even retiring members who are single have to attend a personal briefing and complete this form. Without the DD Form 2656, the Finance Center does not get essential information to correctly establish a retired pay account. Your DD Form 2656 will be completed during your personal one-on-one briefing. The DD Form 2656 is also used to make your SPP election. If you fail to complete the DD Form 2656 prior to retiring, or if your spouse fails to concur in any election of less than full spouse coverage, your retired pay account will be established with full SPP coverage by operation of law. So, don't forget about your personal one-on-one briefing appointment and ensure your retired pay account is properly established.